Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. As we start the day, the GIFT Nifty is down nearly 200 points from Nifty Futures Tuesday close. GIFT Nifty is lower, indicating a gap down start for the Indian markets. Talking about the US markets, the US futures did trade marginally lower after cash markets slipped on Tuesday. Dow posted worst decline in nearly 11 months, ended more than 1% on a lower side. The US market sharply traded lower where Nasdaq was down around 2% as hopes of a soft landing dwindle on CPI print. The US January inflation rate at 0.3% on a month-on-month basis versus estimate of 0.2% and versus 3.1% on a year-on-year basis was the latest economic indicative action one needs to consider. Airbnb Inc. did fall around 4.5% on weak quarterly earnings data. The US 10-year yield did rise around 4.23% as we see this even following stronger than estimated inflation data. And the Brent crude did rise slightly above $82 a barrel as geopolitical tensions continue in West Asia. And last but not the least, the gold did slide below for the first time in 2 months on rising treasury yields. So this is how the trade setup for the global markets this morning looks like. Let us now take a look at the trade setup for today. Technically, the market in the coming sessions is expected to be choppy, with Nifty 50 facing resistance at 21,850 on the higher side and taking support at 21,500 levels. The index is unlikely to get firm direction unless and until it breaks either of the above mentioned levels. In the last trading session, the benchmark indices rebounded with the Sensex climbing around 483 points to 71,555 while the Nifty 50 rose around 127 points to 21,743 and formed bullish candlestick pattern with lower shadow on the daily charts. Technically, this pattern indicates bounce back in the Nifty from near the support of 21,600 to 21,500 levels. After placing at the edge of downside breakout of the ascending trend line support around 21,600 levels, the Nifty 50 showed false downside breakout of the said support and bounced back smartly from the lows, which is a positive indication. If the Nifty remains choppy with alternative candle formation like bull and bear, the short-term trend will sustain. A sustainable move above the immediate resistance of 21,800 to 21,850 levels could open sharp upside towards another resistance of 22,000 to 22,100 levels in the near term. Overall, the index remains range-bound between 21,500 to 22,100 and a trending move is likely only upon breaking beyond this range. Until then, traders are advised to focus on the mentioned levels and trade according to the intraday trend. After witnessing a sharp fall in the last few sessions, the broader market indices like Nifty Mid Cap and Small Cap have recorded decently from the intraday loss on Tuesday and formed bullish patterns, rising around 0.3% and 0.2% respectively. So considering all of these, let's arrive at the key support and resistance levels for both Nifty and Bank Nifty. The Nifty is likely to take immediate support at 21,599 followed by 21,546 and 21,461 levels, while on the higher side it may see immediate resistance at 21,764 followed by 21,823 and 21,908 levels. Meanwhile, in the last trading session, the rebound in the market was largely supported by banks as the Bank Nifty climbed 600 points to close at 45,502 after defending upward sloping support trend line on closing basis with a positive sign. The banking index has formed long bullish candlestick pattern on the daily charts. The bulls made a strong comeback, defending the critical support level of 44,800, which now serves as a cushion for further upside. The index remains in a buy mode as long as the mentioned support holds, and any dips should be utilized to add long positions. The immediate resistance on the upside is situated at 46,000, where the highest open interest is built up on the call side, indicating a potential target for the bullish momentum. The Bank Nifty is expected to take support at 45,002, followed by 44,782 and 44,427 levels, while on the higher side, the index may see resistance at 45,588, followed by 45,933 and 46,288 levels. So these are the important support and resistance levels for both Nifty and Bank Nifty. Let's now take a look at the stocks and news and the results which will be posted for the trading session. There's a long list of cash companies which will be posting its numbers And to name a few, we have Aditya Birla Fashion, Crompton Reeve Consumers, Mahindra & Mahindra, Dishman Carbogen, Glen Pharma, Glenmark Pharmaceutical, Gujarat State Petronet, India World Housing Finance, Ipca Laboratories, Muthoot Finance, Natco Pharma, Narayana Hrudayalaya, NMDC, Sun TV Network, and Wockhardt, the companies which will be posting its numbers during the session today. Let's now take a look at the stocks and news. Keep an eye on Wipro, as the IT services company has invested $66 million in US-based Agin Global Inc. to strengthen consulting and services capabilities in the insurance sector. Bharat Electronics would be in focus, as the Navratna Defense DPSU has signed a contract worth 2,167 crore with Indian Navy for the supply of indigenously designed and developed electronic warfare suit for use on board warship. Next stock in focus would be Oil India, as the Oil and Gas Maharatna CPSE has recorded standalone net profit at 1,584 crore for the quarter ended December FY24, down 9% compared to year-ago period, impacted by lower top line as well as dismal operating numbers. Revenue from operations fell 0.9% year-on-year to 5,324 crore for the quarter, with lower crude oil price realization and lower crude throughput of Numaligarh refinery. The next stock in focus would be Zee Entertainment Enterprises, as the media and entertainment company has registered a 141% on-year increase in net profit at 59 crore for third quarter of FY24 despite disappointing operating numbers. Revenue from operations fall around 3% on a year-on-year basis, and we did see a downtrend, a fell of around 3% to 2,046 crore for the quarter. And last but not the least, keep an eye on Indian Railway Catering and Tourism Corporation, that is IRCTC, as the state-owned company clocked a 17% year-on-year increase in standalone net profit at 300 crore for the quarter ended December FY24. Revenue from operations grew 22% on a year-on-year basis to 1,118 crore for the quarter. So these are all the stocks and news. Let's quickly take a look at the FIs and DIs data. The foreign institutional investors net bought shares worth rupees 376 crore, while domestic institutional investors purchased shares worth rupees 274 crore on February 13th. Provisional data from the NSE did show. So this is how the trade setup for today looks like. Considering all of these, of course, it is going to be a lot of stock-specific action during the session. However, don't forget that there is a lot of volatility in the market, both domestic and globally. However, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.